Mm, Dear participants, thank you everybody for joining and spend some time with us. This is a webinar on a stress test for agri-partners using cash flow management tool. My name is Andrea Dominguez and I'm the Global Capacity Building Specialist at Oikocredit, and I'll be moderating the session with my colleague Antoine Covet from Communication. Before the webinar, we want to share some house rules that were just recently shared in the cover slide, but just in case. As you have seen, when entering the meeting, you're automatically muted. And we thank you in advance that during the presentation, you remain muted to avoid background noise that can distract the speaker. We encourage as well that if your internet connection allows it, you turn on your camera so the session can be more interactive. And I see that most of you have done it, so thank you in advance. We will also like to say, if you also like to say or ask something during the session, please use the chat function. We'll be managing the chat with Antoine, so we'll be collecting the question, or if you have any difficulties or logistic aspect that you are not able to manage, let us know and we'll help you. You can also adjust the way that you're seeing the presentation with a slider on the top of the screen, and you can see if you want the video or the faces more big, or you want to focus only on the presentation. That is up to you to decide. And as I mentioned a few minutes ago, if you have not yet done it, please edit your name by clicking on your name until you see a little pencil, and you can write also, in addition to your name and surname, from which organization you're joining, so we can identify you and see who has joined and where the questions come from. One last thing that I would like to share with you is that we'll be recording this session so we can then share it with you and perhaps with other invitees that haven't been able to join. And we would like to ask for your permission to record the entire session, also including your questions and answer. So if you can put on the chat if you are okay with that, or you prefer us to leave the questions aside of the recording, we thank you in advance. And then, without further ado, I would like to give the floor to Geoffrey Kyoto Musyoki, Investment Officer for the East Africa region in Oikocredit. So, Geoffrey, all yours.
Yeah, thank you, everyone, and most welcome. I know it could be in the morning in some of the parts of the countries, and in other countries, like in East Africa, we are in the afternoon. And many thanks for creating time so that we can have a brief chat on how to navigate these unusual times in our respective businesses. Just want to confirm whether everyone is hearing me at the moment.
Yeah, we are hearing you loud and clear.
And I'm not sure whether you are able to see the screen as well.
Yeah, I can see it now. It's on the slide of the objective. Perhaps
Okay.
you can open the presentation in the presentation format, or otherwise you... excellent. There we go.
All right. Okay, then. So as I said, many thanks a lot for your time. I know we have limited time, but it's important that we share some notes about this whole scenario that we find ourselves in. And one thing we can say is that it's quite unfamiliar. I'm not sure whether any one of us has ever gone through such a scenario in their entire lifetime. I think the last one could have happened almost 100 years ago. It's quite unusual, first in the sense that we don't know when this COVID situation will come to a close. We really don't know. And I also note that most of our clients, most of our borrowers are working not only within their respective countries, but could be involved in an international value chains. You could be sourcing your supplies from other countries, and you could also be selling to other countries. So ideally, the planning that we are able to do now is not based on full information. No one really has full information at the moment. But the worst thing that a business can do is not to plan at all. As we get more information, we should be able to tweak our scenarios and at least be able to make some timely decisions. Another thing that we may not know is that we don't know what kind of decisions that the governments will do. We are not sure what the directives we are going to get from governments in the coming days. We don't know what will be the situation in the respective countries where our buyers are stated. We also don't know how the supply chain will work in the coming days, but at least we need to have some scenarios in which to plan around. So the whole essence of today's discussion is that we want to share with you a way of looking at the coming months, so that at least we are prepared for what is coming based on the information that we are able to get at the moment. And in our case, we are going to use the cash flows for the coming months, and it's based on this that we should be able to have some insights on what to expect in the coming months. And the other thing is that we're going to use a direct method. And the question is, why direct method? I know that most of us are used to the indirect method that we get from our income statements, the balance sheet, and eventually we are able to derive the cash flow statement from that. But in our case here, we're going to use the direct method, which gives us more details on the items that are affecting our cash flows in our business. So we also get some time, much of our time actually today we'll spend it on the Excel tool, so that we can at least learn how to use it and how to make decisions based on that. We also try to develop some scenarios that we're going to work with, and then also try and see how we can make some decisions on key line items based on the scenarios and the results that we get from the scenarios. And eventually, of course, I believe we'll have some time for Q&A. And one thing to underline is that what is most important now is to enable the business to survive this period. We really want our partners to survive this period. Also, of course, we've said we don't know how many months it will take, how many days it will take, but the whole idea of stress testing is to ensure that we survive these critical moments, and that way we can live to fight again. We can live to do business in a later date when everything comes to normality. So the question is, why monthly cash flow? Of course, we'll share this template, so I may not go line by line. I'll only touch on the key issue there, but of course, we should be able to share it thereafter, where you can go through it line by line. So why are we considering cash flow projections for purposes of stress testing? And the whole issue is that liquidity crunch or any challenges that are based on liquidity issues can actually lead to the borrower or the business closing down even before we get out of the COVID-19 situation. So we really need to have a situation where we can identify some gaps in the coming months, and based on any realistic projections, we can make some prior adjustments before then. Because based on the cash flows, you can find that in the next 4 months, in month 4 from now, you may have negative cash position, and then you need to start making the corrective measures now, so that by that time you are not affected by the liquidity challenges. So based on that, if you look at the number 4 there, is that this will enable our clients. Today, you'll allow me to call you clients, but we really prefer to call you partners. And we are partners because we are working with you for the support of the smallholder farmers that you are working with. So this will enable even you as our partners to make prior arrangements, just in case you require some emergency funds in the coming days. And the question is then, why direct method? I think this direct method really tries to give a description of each item that is going to affect your cash flows. If you look at the indirect method, you realize it gives you a lump sum figure. It doesn't tell you whether it is the staff cost that is going to affect your liquidity position. It may not tell you whether it's the sales that have really gone down, but the direct method is able to pinpoint which is a specific item that is costing you much. And again, this can easily be used to project on trends. And again, as I've just mentioned, it's able to pinpoint the specific item that you need to look at in your cash flows. I think you should be able to go through some of these other items. So you allow me to go to the next slide. One thing that you need to really look at as a business during this time is to try and monitor the market, to try and monitor the environment to see how the pandemic is likely to affect your company activities. So every day, every evening, every time, any announcement that you hear, any pronouncement by the government, any communication from your buyers or even from your suppliers, you should try and interpret, how does this affect my daily operations? How does this affect my business? And how it affects you in one way or another, it should be able to affect your financials. So by looking at it that way, you are able to go straight to the line item that has been affected by that communication, and then you are able to make some arrangements based on that, or even some adjustments. So there are some key questions that you should be able to ask yourself, and you should be able to look at your key revenue lines. Where does your cash flow come from? What does your cash in come from? Is it through, if you are selling several products, you should be able to see which is your cash cow, which is your product that sells much, which is a product that gives you good margins, which of your products is really the one that is sustaining your cash flows. So you should be very sensitive on that, and you should be able to know, even if you sell now, what is it that can be paid for? Because now I really want us to compare that with also the aspect of income statements. I know most of us are used to income statements. You realize, for example, in trade finance, those who are dealing with pre-export, you realize, for example, in a particular month, and we will see that very soon in the next document, you'll see that in a particular month, for example, in April, you could be busy buying raw materials, but you are not selling. But when you go to the income statement, it could be looking at the sales and also the cost of sales as a proportion. So you could find that the purchases that you have done in April are not directly related to the sales that you have made. Because I know in cash flow projections, we normally use cost of goods sold as a proportion of the sales. This time around, it may not work well, because you may have some peak seasons where you are buying much more than you are selling. So the proportions may not work.
Sorry to interrupt you, but we have a message in the chat asking if you could speak a bit slower, because for some of the participants, the English is the third language. And of course, so if you can take it a bit slower, we thank you.
Yeah, well, noted. Thanks a lot. I will just proceed, but I'll try to go a bit slow, knowing, of course, that we'll want to spend more time on the Excel tool. Yeah. So some of the key questions that we really want each one of us to ask ourselves is that item number 3, if you can sell, because it's not just a matter of have we sold, because you can sell in credit, and these credit items that we've sold on credit will be paid for next year. For now, we really want to focus on what we can get paid almost immediately, even in our negotiations. And for our working purpose, we'll be looking at, for example, what can happen in the next 3 or so months. So it's an issue of what can be paid in the next 3 months. Then next you need to look at what are our key costs. Yeah. What must you pay today, or what can we negotiate for postponement? The other issue is that, of course, we know some of our suppliers, if they are requested, they could give you a small discount, and then you are able to pay the respective amount, because every person in the value chain is being affected by COVID-19 scenarios. So you could realize that some of your suppliers, they also want you to pay them cash. Previously, they wanted you to pay after 60 days. But this time around, they want you to pay in 30 days because they also are facing some liquidity issues. So it's really a time that we need to sustain discussions between ourselves and our suppliers, and also with our buyers. Then there is the issue of debtors. We really need to look at our debtors position. and ask ourselves, who can pay us now? They could have wanted to pay us maybe a month down the line or 3 months down the line. But if you could give them a small discount, perhaps they can take advantage and they are able to pay you now, because what we really need to have now is cash. And when we're discussing stress testing, cash remains the king, because if you don't have cash, it's very easy to close down at this time. And we really don't want our businesses or our partners to get to that situation. It's also critical to look at our lenders and find out when are the payments due and which of the payment and which respective months. And that's why we went for the monthly cash flow, because we want to put to take note of the respective payment on the respective month. These are also part of the questions which, of course, you should be able to look at them. We'll revisit them later on after we've looked at the tool, so that at least we get more time for the core business, which is to learn how to use the tool for our case. Hope that speed is better now.
Yes, thank you very much, Geoffrey.
Right. Okay. So I've given down the procedure there, but of course, since we are going to look at the tool shortly, I think this is something you can read later. But again, we'll try and look at the tool directly and see how that works out. I've tried to give some of the procedures that you can use for now. Yeah. What we've done is to look at three scenarios. We have a base case, and we were with what we are calling a base corona case. It's like now there we have two base cases, but I'll do a distinction between the two. And we have a worst or adverse corona case situation. And if I may spend a minute here, is that the base case is a situation as it should have been without corona or COVID-19. I know that by late last year, most of our projects had already developed cash flow projections or cash budgets for the year 2020. So that works as our base case. It's how things should have been in the absence of the current pandemic. So that is critical for us to see where we are vis-a-vis where we wanted to be. So that is the base case. And the base corona case is where we are still operating, but we are not achieving the targets that we put in the base case scenario, the projections that we had already developed. So the base corona case assumes that we now have corona in the globe. We are not able to operate optimally, or even perhaps that you are even operating better than the base case, assuming that you are selling essential commodities and the demand has actually increased. That is the base corona case is the situation as it is when we are facing this challenge. And the worst corona case is really what you would call an adverse situation. This is a situation where the government may declare that there are no businesses to open in the next 3 months, or even in a bad case, God forbid, that you have a case in your company. Say, for example, 3 or a number of your staff have been affected. It may be very difficult for you to operate, even given the guidelines by the respective governments. So we've identified those 3 scenarios. For the first case being the base case, where we assume nothing happened, everything was going as planned. And we have the base corona case, where we have to make some adjustments based on the current government guidelines, and also based on the feedback we have received from our buyers, and also based on the feedback we have received from our lenders as well. We've also supposed to use the information or the feedback we received from our suppliers. So that really gives a more realistic situation scenario analysis for the current situation. But the worst corona case is a situation where you may not be able to operate in a number of months, maybe 3 months or so, or even 2 months. But in the same period, you have some obligations to meet. Maybe you need to still pay some workers. You may need to pay your workers. You may need to honor some debt obligations perhaps, or you may have some fixed costs that you may need to pay, for example, security expenses. Yeah. So those are the three scenarios that we're going to see in the Excel sheet, and we'll see how that works out for us. I really want to put a rider here that I think some of us could have come across this, but it's known that turnover is what we call really a vanity, because this time is not about selling as much as possible. You could sell all your stocks and they are not paid for. So the issue is that should you purchase the raw materials now, or should you reduce the volumes of raw materials that you are buying at the moment based on the feedback you are receiving from the market, based on the feedback you are receiving from the government, or even based on the feedback that you are getting from the buyers. We also know that profit is what we call sanity, because yes, profit is good. You could have your income statement telling you that in the coming month you are making a profit of $10 million, but that is all accrued, right? It is accrued. It may not be realizable now. The buyers may not pay you at this moment. But why we're going for cash flow is that cash is king. Cash remains a king in the period of stress. Yeah, fair enough. We'll have some Q&A later, but for now I want to open the Excel tool so that we spend some little time there, at least so that we can learn together on this. Just a minute so that I change the
Isaac, do you want me to read your question for you?
Fair enough.
Or do you want to do it by yourself?
Fair enough. We can have the questions later. I want us first to look at the Excel tool.
Read it for me.
So for now, I would want us to look at the tool that we are discussing. We'll have. Say that again. We should proceed. Everyone is set?
Yes, Geoffrey, all good. There were some participants unmuted, so I'm muting them again. And Antoine, we leave the questions for the end, so continue, Geoffrey, and yeah, I'll take care if somebody else unmute.
All right, thank you. So this is a tool that we've come up with, and this tool, one thing about it is that we've tried to make it as simple as possible, because we would want it to be used even by managers who may not be finance experts. We know some of our partners could have experts in Excel. We could have some partners who have a finance department that is very empowered, but we wanted to have a tool that every of our partners can easily understand, and every of our partners can easily use and make some decisions based on that. So you realize maybe I'm prejudging, but it's we really tried to make it as simple as possible. So down there, you'll see that we have the base, the corona base case. We have the base case, and we have the Andiverse case. Where we have the model here is that by the end of the day, we really want to see how that projection looks like. Yeah, we should be able to select from this. I don't know whether you are able to see that cell number B30. If you're able to see that, that's where we should be able to select. For example, you could have number 2 there, and we see how the cash flow behaves. And just to shed some light on this graph, because graphically I think it communicates better, is that the continuous line shows the cash carried forward. Yeah. By the end of the month, if you have a 0 or a negative cash carried forward, means that you will be in quite some stress. And the word stress here is synonymous with lack of cash, right? We have the bar chart there, the graph there, which shows the total outgoing cash and the closing bank position and the total incoming cash. That should be able to come out from the tool. There are some minor or small details up there where we direct that you only fill in each of the scenario sheets. In this final sheet, you are not supposed to add anything much other than one cell, which I'll point out to you. So on this final sheet, you are not keying in anything. You're only keying in some details based on a base case, and the base case on the corona base case, and on the adverse corona case situation. But on the model, you are not supposed to key in anything. The only thing that I will want you to key in there is cell number C80. We cannot see it, and this is on the cash brought forward. That's a cell there. That's only because what you are bringing forward, say from the end of March, could be say, and the figures here are really more or less not related to any of you. We looked at one of the cases that we have, but we tried to hide the name. So at least you may not be able to know who this is, but at least it should be able to guide you. So in that, you will have to put in the balance brought forward. It could even be 700, yeah? It could also be 200 or 100. So that really gives us the beginning position. And in this sheet, you are not adding anything else, right? So where you start is actually on the base case. The base case is actually the situation as it should have been without COVID-19 in the world. So this is where you put the figures as they were when we started the year without the challenge of COVID-19. What we've done is to list the specific line items. You'll see we have the different products that you are selling, the price related to that. You could be selling more than one product. We have businesses that deal with more than one product. That's why we created a scenario where we could have more than one product. If you're only dealing with one product, then you only fill in for one product A. You can give us the name, and the others we can have zeros, right? Yeah, we could have zeros on the rest of the documents. Fair enough. So that means that in this case, if you are selling in the units, again, I could not put kilos or tons because you are using different metrics. If you are using tons, ensure that the units are correctly captured here. You can tell us the units that you are using, the price per unit, again, in the currency that you are using. You could be using Rwanda francs, you could be using Kenya shillings, or you could be using US dollars, or even some ZOF from our partners in West Africa. So I didn't decide for you whether to use dollars or Kenya shillings, but in this case, you'll use your currency as you use in your day-to-day operations. On product B as well, and product C as well. Then I've also created a tab where you could put the other cells. Yeah, we could have some other cells that relate to low quality products or even some byproducts. Then you can put that in that particular row. You find that I've created a row only for payment to suppliers, not related to product A, B, and C, because I know you have different schedules where you have a record of your suppliers, right? And again, why I didn't put the quantity and the price is because at times this is not related to what you have in the cells. And this is what I pointed out earlier on, that for example here, most of us, when we are doing cash flows or even income statement, we assume that payments of goods sold is a percentage of the sales. In our case, that may not work well, because for example, I know in Rwanda, they are busy buying coffee now. So we could have more sales to more purchases happening now, but the sales could be much lower, right? During the respective months. We could have the sales higher in the other months. And that's why I've said that for the payment to suppliers, and these are raw materials. We put it together. You can move that figure from your schedule of suppliers and transfer it to this table. And one thing that I need to point out is that when we talk of the sales here, it's payments for sales. It's cash payments. We could have some sales that happened in April, but the payment happens in July. So that payment will be put in July, not in April. So here we are not recognizing credit sales. So I really wanted to underline that the payment to suppliers may not be related to the sales. And you'll see that in the table here, in the final sheet here. You may realize that this cash received is not related at all with the payments that we've made to suppliers. So that's why I didn't want us to take the payment to suppliers as a percentage of the sales, because it will really vary from month to month. So what we've done in these 3 sheets is that we have tried to list possibly all the cost items that we could think about, so that you don't have to edit much on the table, and it's user friendly. The other item you'll see, we've tried to list the rent payments, the business permits that could happen, say, once during the year. And that's why we've put it, that's just an hypothetical figure there. It could happen in December or in January, but it doesn't happen throughout every month. We also have items like insurance, where you could be paying once in a year for all risk insurance. But we have some cases where you are exporting and you have to pay some insurance items which could vary from month to month. So that should be based on the sales that you've made. Yeah, we have some utilities that could vary. We have a bit of internet, which are mostly fixed costs. Travel and transport, audit fees. Basically, these are the line items that we come across. What I would recommend is that anything that is not featuring in the above items, we can put it under other expenses. And that's to try and have some uniformity in the tool. Any other thing which is not directly captured here, we can put it under other expenses. That's more of operating activities. We have costs paid, and for employees, this could be both casuals and permanent employees. We have duties that we are paying. We have corporate taxes, VAT that we pay, and this will relate to more of operating activities as well. Yeah, you'll find some other lines that deal with asset purchases, and asset purchases relate largely to investing activities, because once we go to the model, you realize we've tried to segregate it between the operating activities, which is common with cash flows. We also have to distinguish what we have under investing activities and financing activities. So our cash flow model will also try to segregate that. And that's why we have some assumptions on which assets we need to buy. And I think this is a time that you need to be careful with asset purchases if they are not absolutely necessary. I think we'll look at some of the decisions that we need to make based on the findings here. If you have to sell some assets that are idle and you have good buyers, that could come under that. And if you are making some alternative investments, or if you are investing in subsidiaries or something, I think we've tried to capture all the assumptions. And one thing you need to note here is that why we've not lumped them together is because we want to know exactly which of the items is really affecting or impacting on our cash flows in a major way. We could as well do a percentage of each based on the total to know which of the line items. So we've not really tried to aggregate, but to go granular and ensure that we can see which of the respective items. Down there, you see if we have some drawdowns on credit facilities, if we are to draw down from microcredit or from any other lender during the year, then you need to capture that amount there based on the approved terms and the disbursement terms that you have agreed with the respective lenders. That could be microcredit plus any other lender that you are working with at the moment. You also need to capture the capital repayments in the respective months, because I know we have repayment schedules, which tells you that the first installment falls due in the month of July, then you capture that specific amount there. We also have interest aspect. You'll also reflect the interest to be paid on the respective month. If you are going to get some equity from the investors, again, that can come there. This could be not, you could get some from the share investors, or you may not. But we've created that row so that it provides for that. And the last one is on dividend payments. So once you have the base case, this is a base case how you were to operate before COVID-19, and if everything was to operate as planned, right? So once you've done that, then we now have to, what you've done is to copy all this. We copy all that and paste it in the Corona base case. If you copy that, it will populate all this. What I've done here is to try and show you how it can be different from the base Corona case. But let's work on that and see how that will look like. So that is now the same information as we have in the base case. But at the moment, you may realize, based on the adjustments you have to make, maybe the government has only allowed you a small number of working staff, or maybe the buyer has already changed the delivery or the shipment date. That could affect how much you are able to sell. And most of our partners, I know, for example, those that are doing tea, or they have an auction process, at least they know how much they sell every month. So that it's easier for them to put those figures here, different based on the projections per month. But we have some trade finance partners who have, say, for example, in April, it's a buying season, but with very low sales. So maybe instead of selling 800 tons, you are only able to sell 200, for example, because the buyer has already cancelled the contract. And in May, for example, you are only able to sell 150 based on the contracts that you already have. And in June, perhaps you have already received contracts that you need to ship for, say, another 200. That's how things can now get different. In July, we may not know how things will look like. We don't know how it will look like in August. But at least we have contracts that can take care of us between now and July. And that's why you are able to do some adjustment on this tool based on the new information that you get on day-to-day basis. So these are some of the adjustments that I was talking about that based on the contract, you already had contracts covering you the entire season, but some of the buyers you are not even able to ship now. So you have to reduce that amount respectively. You could realize that in months like December is when you sell much. So far, we don't know whether by then we'll have medicine for COVID, whether we'll have a vaccine for the same. So we may not be able to know much that for now, but at least for the next 3 to 6 months, you have the contracts to support you. You have the announcements from the government. You have the announcements from the auction. You have also the announcements regarding to how the factory flow should work, how many number of staff are allowed. So at least you are able to know how much you are able to sell. And that could as well affect all the other products. Maybe in a good case, you are supposed to do 400, but now you can only do 100, for example. Yeah. And you can only do, say, 200 in May based on the contracts that you have. And in June, you may not have a contract for now. So that becomes a 0 or even a realistic estimate like 50 based on your communication with the buyers. For businesses that operate evenly throughout the year, this could be easier for you because at least you know how much you're able to sell every month. Yeah. Other sales, as I mentioned, will capture any other sales. If you, of course, this month there is a reduction in how much you can export, it means you can only process a little, and byproduct will also be low. So that could also come down based on how you know your conversions of your business products. That could also come down to around 50 as well, yeah, based on how much you're able to process. These are largely byproducts which come from the products that you have sold. That will really also be affected, yeah. So there is a critical item here, the payment to suppliers. I know this could be the peak period for getting raw materials from your suppliers. There are borrowers who are dealing with nuts, for example, macadamia, There are those dealing with coffee, for example, it could be the season. There are those that are dealing with tea, for example, or even cashew. The cashew season could be somewhere in August or in July. There are those dealing with cocoa, that could be somewhere in September as well. So with this, you are able to map where the activity is. And just to remind you that this may not be related to the sales that you have made. So we need to make that distinction when populating this document. We have the rent, it's a fixed, if you are on a rented commodity, it's a fixed cost. We'll see how we can make decisions around this based on the findings. And then we have the other rates. These may not depend on the sales. These could be largely fixed costs. So in a base corona case, for example, an item like employees, it's really not the opportune time to fire your employees. You have some cashiers who could be taking a very small amount of your cash. I think it's good to be mindful of our employees as well. So when making decisions, it's good to, of course, to note that the cost is high, but that may be the last cost you want to interfere with, at least to sustain your workers during these difficult times, unless it is extremely necessary. And the beauty of this is that it will point to us, as you'll see later on, it will point to us which months may be problematic, and then we can start making decisions on what to change now, so that during that time, when that time comes, we are fairly safe. Yeah. So the rest are fairly straightforward, and as I mentioned, we are all used to these terms. It's something that anyone could be able to use during this time. I know we are running short of time, so I want to believe that this template could be pretty simple to understand. And as I said, if there are any challenges, I would be available to discuss one-on-one with you directly through the email that I've shared on the first slide. We have some notes here where I would really want you to capture the assumptions that you have made. For the base case, of course, that is what we had projected. But for the base corona case, because every client is different, even when both of you are dealing with coffee, you could be having different scenarios, different costs and different buyers. So that could differ. And that's why it would be good for us to see what kind of assumptions you've made for this period. And even in the worst case, what have you assumed, so that we can all be reading from the same page. When we mentioned adverse corona case is a situation where you may be forced to close down. And you see, for example, in months of July, we are not able to sell anything. Yeah, even the purchases have really gone down because we may need to sustain our suppliers somehow if they are farmers. Otherwise, if we don't buy, the crop may go bad in the fields. So we could have a situation where the suppliers are able to supply to you on credit. Yeah, the issue is, do we need to pay for it? And as a business, if you pay for it and you are not able to sell, who suffers the loss? So I think it's a time that we now need to have discussions with our suppliers, with our farmers, and see which of our farmers, which our suppliers can accept some payment terms until we are able to sell the product. You see, we may not be able to buy much in an adverse situation. So you see that the purchases have also gone down a bit. But the sales are not really, we can't say this is a percentage of the sales, because the seasons of buying and season of selling could be pretty different. So that really assumes a very bad situation where perhaps some staff have been affected and the government has directed that you close your premises for some time, God forbid, or where the buyers have said for now we are not able to buy, or if you are selling to USA, for example, and there is you are not able to ship anything, of course, that will be an adverse situation. So you can capture that. So briefly, for just a minute, let me revisit this model where I've said you are not adding anything other than the cash brought forward. Yeah, cell number C8. Other than that cell, you are not inserting or capturing anything in this tool. What you go to is a scenario selector there, where you are able to see what is the impact of those assumptions on your cash flows. And this is a base case, and it shows you that we are not starting in a very good position. Maybe you spent much of your reserves last year, so The season could be starting in a fairly low position, but because of the planned sales, you realize that your cash flow carried forward is growing. That's a good case scenario. But if it's a worst case scenario where we have one, for example, case number one, you see that has fallen below zero. It means that, right, for example, maybe from April all the way to November, you have no cash in the business. It will be very hard to transact. And as I said, these are hypothetical. Once you map your figures, it may show you that in a case like scenario number 3, for example, that your cash flow is going below zero, say from June to around February next year. Yeah. If you go down, it will show you how much is really below zero. And in our case here, you see that in this scenario, you have at least negative 4,000. So between now and that period, you need to maybe cut down on some costs, or even try to sell much more, or even try to talk to some of your buyers so that they can pay you earlier, or even afford some discounts to your debtors. That way they can be able to pay you on time before that time comes. We don't want to wait until we are at the negative level. Once at then below zero, it means that the following day you cannot operate. And we wanted these tools should be able, once you capture your respective figures, it will show you which months are below zero. It could even be from September to December. And since we are in April, you are able to go back to your respective cost items and your revenues and try to push more sales, try to push for earlier payments from your buyers, or even try to bring down some of the costs. For example, something like rent, for example. If you are in a rented commodity and you are not selling, it will be the opportune time to discuss with your landlords. That way you can negotiate maybe to defer the payment for a couple of months until that time comes to, we are past that time. You could also have a case where you are not able to reduce any of the costs because actually the demand has gone up, but the costs have gone up a bit, in which case you need to discuss with your lenders. Yeah. If you need to discuss with your lenders, this tool will help you to point out which gap you want to close. And it will also show you how much you need to borrow. And in that case, it will be the highest amount in the negative figures. That is the line that you need to have. Okay. That's the amount. The very last line here should be able to guide you on how much would be the negative figure that should cover you. And if it's a credit line, you only need to draw down the negative figure for that respective month. So it's really a live tool that should be able to point out the respective months that you really are likely to face some stress through the planning months. Why we need to do this is because if we don't do anything, because we think we don't have information, we may be very caught unawares. And the more reason why we need to work out on something. So this is why you do the selection. It's either the Corona base case. And as I said, we've already touched on the figures. Once you map your figures in this tool, it will show you the respective months. And also down there, it will show you how much is the negative figure. In the very difficult situation, the best place to start with is on your operating expenses, because it's under your direct authority. You can make decisions around the operating expenses, how much to sell, how much to buy, how much you are paying on utilities. That is under your direct authority. But there are other items like government payments. You have some debts to be paid. That is something you may need to negotiate with your lenders. And now this is going to enable you to point out whether the installment of a month like October, why you are unable to pay, or whether you will be able to pay. And even the lenders will not be caught unawares, because we can discuss this early enough, for example, in June or in May, and see whether to boost sales a bit, whether to reduce the purchases that we are doing. Well, quite some time. I know we have limited time. And as I've said, we should be able to discuss this even with the respective borrowers or partners. if you have a different scenario that you would want us to look at, I should be able to work with you to develop that and to take care of everything. It's still a document that we can refine further, so any feedback that we get from you should be able to help us to enhance it a bit. It's a tool that we are using during this crisis. I know we always have cash budgets, which in most cases are even figures, but this time we cannot work with even figures spread throughout the respective months. So maybe given the few minutes, I can invite some questions, but of course I've opened future discussions any day just to ensure that we better understand it. Thanks. Thanks, Sandra.